Well, hello, folks out there in YouTube land. Got a big show lined up for you, and let's get right on into it. All right, let's pull up the screen here. Palantir, and why I bought Palantir. I actually bought it Friday, and I'm going to be looking to add some more of it. And let's get into Palantir. But first, I'm going to talk about the market in general. As you know, it's crap out there right now. And really, the only thing people are interested in right now is value stocks and stocks that are profitable, and they're not as concerned about growth right now. Really, even a stock like this that has high growth, that also has positive cash flow, but doesn't have profit, they're crapping all over it. And you can see that with the share price, how it's been basically dropping like a rock. And the big parts of that and what's causing that is this. And I like to use this picture because I think it's funny. But anyway, it's actually very realistic in that inflation is scaring the crap out of the market. We know interest rates are coming, and this Rona has been an absolute nightmare. Now we got Russia. So it's if it's not one thing, it's another, and it's really a problem. And then you've got Janet Yellen, and you've got Chairman Powell out there. They were talking about how this was transitory inflation, and it'll go away, and all this crap. Nonsense.
Nuts! They're nuts! They know nothing!
Okay, so there's Kramer for you. And he's not happy, and I'm not happy, and you're probably not happy either. But this is what we're dealing with, and it's a real problem. But there are opportunities out there that are pretty darn good. And when you make money in the stock market is when basically around crashes. And we've pretty much had a crash, and I'm looking real hard at some stocks, and Palantir is one of them. And I have started a position, not a big one. I may be adding later, but let's talk about Palantir for a little bit. All right, the big positives about Palantir, well, actually, it's really the story of the company that's so exciting. I mean, you think about the fact that what data mining is all about, and then software as a service and how profitable that is. I mean, this is a company that's got gross profit of 78%, and it's probably going to go to 80. That's very exciting. Number two, what they do, any business could use and needs. And the bigger the business, the more they need it. And they can help a company in so many ways. It's incredible. So anybody could be their customer. And really, nobody's quite doing what they're doing. And they're also working with the government and municipalities. And while no company is going to get super rich working with the government, what that does is it pays its baseline bills. And then you build on that with corporations, and that's what they're doing. So the story of Palantir and where they're headed looks great. So that gets people excited. It's also a hype stock. So understand that. This is not a stock that's being sold on fundamentals. It's a stock that's being sold on growth and somewhat hype, and also the fact that it could be a huge software company one day. I mean, huge. So that gets people super excited and pumped. I really like this company, and I'm willing to take some chances, swing trading this, and possibly one day buying it long as well, and I expect to do that. But right now, I'm going to swing trade this thing, and here are the reasons why. So let's talk about exactly what they do. They send out forward deployed engineers to the company that they're working with or about to work with, and they'll take their software and then they'll tailor it to where it works for the company that they're proposing or they're going to work with. And that tailoring of the software is critical. And that also becomes a very sticky business model. And once you've had something tailored just for you, you like to stick with it. Obviously, if it's helping you. Now, if it's not helping you, forget it. But obviously it is, because look at how many customers they're adding all the time. And then when they get a customer, they spend more money with them. That's exciting. And just to give you an example of one or two of the things they've done, like BP, for example, they help them increase their production by studying how they drill and helping them drill better through AI and through software. Then you have a company like Airbus where they help them assemble a plane in a more expedited manner. And that obviously saves them money because it saves them labor. So it's those things right there that a CEO loves. There's nothing they like better than to have analytics and to have information at their disposal that helps them save money. They're all about it. And especially if you're an oil company and you can increase your production by 10%, almost all that 10% becomes profit because you've already covered your fixed expenses. So it's hard to put a value on that. All right, now other positives, we know they've got $2.3 billion in cash. That makes me comfortable because now I know there's no risk of bankruptcy or anything crazy happening with this company. They got tons of cash, 2.3. Here's the next big deal. Look down here under debt. See that? Nothing. Absolutely no debt. So $2.3 billion in cash with a B and no debt. I love that. So balance sheet check plus. That's awesome. Now let's get down into the P&L. Third quarter, I believe we've got here. Okay, so $392 million, and their growth is great. They went from $289 the year before to $392. So that's what, 30–40% growth. Okay, so we've obviously got great growth, and that's very important with this company. Now, the problem they've got is they're not making money. And we're going to get into why they're not making money, even though they are cash flow positive. So here's that. All right, so for the 9 months, for example, they've lost $364 million. Look under stock-based compensation, $611 million. So the reason they're not making money these first 9 months is because they're basically handing out shares to the top people, pretty much. Now, there are probably some other engineers and people that are making some, but I would think the big chunk of that is going to the big dogs. And so that's a problem on the bottom line. Now, that's something they can solve. That's one nice thing about this business. It's growing. They're increasing their revenues. They got a great profit margin. And the reason they're not making money is because they're basically taking care of themselves. That can stop. You know, they can lower that if they want to. If they want to be profitable, they can be. But I think they're focused on growth, and that makes some sense to me. Fundamentally, I don't like it because it dilutes the company. And actually, I have a video of how stock-based compensation works, and it's kind of like this.
How about me, boss?
Oh, yeah, one for you.
And me, boss.
One for you.
And me, boss.
One for you.
And me, boss.
All right, yeah, that's pretty much how it works. So you've got a bunch of top dogs that are paying themselves really well, and since they've just become public, that doesn't shock me any because this is kind of the payoff time to where, you know, all that work over 20 years are like, hey, I'm going to cash in some. But hopefully over time that will diminish and it will become less of a problem because their revenues will be growing so fast. However, that is a negative. Even though it is non-cash, and I understand that this is a cash flow positive company, and that's the first step to getting profitable, is you've got to start having positive cash flow. Once you get to that, then you can get to making money. And especially given the fact that it's stock-based compensation that's keeping them down, again, they control that. Understand that. They could be profitable this minute if they wanted to be. So that's not like they're over there having to deal with macro problems that they can't control. They're in total control of this. So that I do like that. Can you like something and not like it? Well, that's what this is. So there you go. The other big positive is, again, the growth. Q3 revenue grew by 36%. And as you can see, the acceleration as it continues to go up, and this is their commercial revenue. So this is not to government. As you can see, commercial customer grew by 46%. That's quarter over quarter now. And they did close 54 deals of at least 1 million and 33 of at least 5 million and 18 of at least 10 million. So big money, no whammies. And again, there's your free cash flow. And that's an improvement of 172 million year over year. So that's getting better. And as that gets better, they'll get closer to profitability. And here's the obvious right here. Negative 53 cash flow to 119 positive. So their growth is excellent. So like I say, I'm very interested in this stock. I bought it. I just started buying it. I bought it just slightly over 12 bucks. I think I paid like 12.10 or something, 12.07. And I am putting that in my Roth. That way I can do either one. I can either swing trade it, which is what I'm leaning towards. And if it stays anything between 10 and 12 bucks, I'm going to buy and build up a pretty good position. And I'll be planning on swing trading it. However, if this company starts showing profit, that's a different animal. If they start doing that, I'm going to start throwing it into my regular account and I'm going to build a position over there because this could be a huge company one day. It could be a behemoth. Now, that doesn't mean it will be, but it sure as crap could be. And that interests me a lot. So like I say, between 10 and 12 is where I want to get it. I know y'all are thinking this thing can't go down to 11 or 10. Surely you can't be serious.
I am serious. And don't call me Shirley.
All right. So yeah, yes, it could. I'm not saying it will. It might not. I expect this thing to bounce at some point because there's a lot of people watching this, and this will probably, in my opinion, be one of the first to come back from this basically crash that we've had. I mean, this thing was at $45 and now it's at 12. I mean, that's down, what, 70%? So if anything's going to pop back at some point, it may take weeks or months, it's probably going to be Palantir because there's so many eyeballs on this stock. I mean, it's very watched. And that matters because when it does start popping up, you're probably going to have some FOMO going on and they're going to try to jump on this thing. And it's probably going to go. So that's what I'm looking for. And again, that's why I'm swing trading it. But if I start seeing fundamental improvement and I start seeing profit, now that's a different animal. And then I can start really, loading the boat with it and something that I could hold for a long time because who knows how valuable this company could be one day. I mean, right now it's sitting at what, 24, 25, 26 billion. I mean, what if this company's worth 100 billion one day or, 250? What if it's worth, it could really go up. Remember, it's software as a service and anybody could be their customer. So something to take into consideration. All right, folks, and that's Palantir today, and that's why I bought Palantir, and that's my mindset on it. And if you like this content, be sure to hit that like button. Lets me know to continue to cover Palantir. And if you haven't subscribed, hit that subscribe button. I'd certainly appreciate it. And I hope you did like the content. And we'll see you next time on Mr. Frugal Investor.